This is Stefan Ninsala, Certified Financial Planner. Thank you for watching my videos. If you've seen any of my previous videos and you're watching this video as well, hats off to you. Now, I want to take some time and tell you about investments, right? You have your opportunities to build wealth through real estate, the stock market. So in my previous videos, you've seen me talk to you about finding out how much your essential living expenses are, taking a look at what your net pay is, putting into a 401k and IRA, but now you're ready to begin investing into the stock market. And when it turns in terms of mutual funds, exchange traded funds, as I mentioned before, that's usually where you'll have a fund manager who's buying and selling the stocks for you. So in an individual retirement account, perhaps you've heard of this guy right here, Charles Schwab. You have many others where you have Fidelity, you have various investments accounts that you can go in and you try to buy individual stocks, options, and those different things. I'm not going to go into those details in this video because when it comes to investments, there's no one size that fits all. Just because you're young doesn't mean you have to be aggressive. Just because you're old doesn't mean you have to be conservative. There are all types of various investment risk and the difference of how much you're willing to lose, because everyone wants to gain, but how much you're willing to lose is going to be the difference of what kind of risk you really need to take. And that's where you need to talk to a financial advisor, a specialist, someone who's going to really take a look at your specific situation, your specific needs, and get you taken care of in that instance. So when you're investing in mutual funds or exchange traded funds, ETFs, you'll have a fund manager who is buying and selling those securities for you. So you don't have to go into the markets and try to figure out if you want to buy McDonald's or Disney, ExxonMobil, or small companies you've never heard of, companies that are outside of the US. They may be in Europe, Asia, South America. So buying a mutual fund is not a bad thing if you don't have the time, if you don't have the discipline, if you don't have a strategy in place. But long term, as far as I'm concerned, I love a buy and hold strategy, but to make adjustments as needed. So for your specific risks, as an asset management specialist and to talk to people about risk, just because you're young, it doesn't mean you need to be aggressive. And just because you're older, it doesn't mean you have to be conservative. So in the instance of what kind of risk you want to take, when the markets go up, everybody loves that ride. But when the markets go down, how much you're willing to lose determines what kind of risk or risk taker you really are. So go ahead and speak to a specialist. You can always check out a group like Charles Schwab or Fidelity. Many platforms are available where you can buy and sell stock investments, et cetera, at no cost, but you definitely want to speak to an expert if that's not your cup of tea. But let me talk to you about real estate. Real estate is actually a fantastic way to build wealth through the equity, increase your net worth overall, and potentially receive investment income through rental properties. Let's start with having a primary residence, because I know a lot of you may rent, but your primary residence is where you'll spend the majority of your time. Even if you have a mortgage, the market value that goes up, guess what, is yours. So if you decide to sell that home that you owned, that profit becomes yours. But if you're renting, the landlord actually keeps all your money, and you've lost out on the time value of the money spent. But if you bought a home, say you live in it for 5 years, and the market goes up $100,000, $200,000, the IRS allows you to sell with up to $250,000 tax-free in gains for an individual and $500,000 for a couple. So what you have to do is live in that property for at least 2 years out of a 5-year period, and then that applies to you so that you're not necessarily flipping homes and becoming an investor in the real estate market. But if you did buy the home and you wanted to rent it out, guess what? That's the way that you can gain additional income from someone else who's living in the property that you own, and then you can live somewhere else and then you can have those areas working for you, building wealth. However, I understand that some of you won't buy because you've told me your credit is bad or you have no credit at all. So let me get into some details about how credit is actually based. So the first factor is your payment history. So they want to know if you pay late, do you pay on time? So having good payment history is one major factor. The second factor is length of credit history. So the longer you show you have good history, the better. So with those two combined, that's nearly 60% of the battle. Now, the third factor, which is another factor that people don't think about, is credit usage, or what they call is a ratio. So let's just suppose you have a credit card and it's $5,000. And that one credit card, you've maxed out your credit card and you only have the one credit card. So $5,000 on this one card is actually bad. But in that same example, you have $5,000 on one card, but you have other cards available. And on those other cards, you have a total available credit limit of $20,000. So now instead of having 100% usage with one card, $5,000 on $20,000 total available, it looks much better. You have a usage of 25%. So the different lenders are looking for you to have less than 30, but I say 25, 20% is a target area. If you can get less than that, that's when your credit score starts to get to that 750, 800 range over time. And so now, if you start there, and when it's time to purchase, the interest rate that you'll be able to get will be as low as possible to help with your overall costs. So in conclusion, let me just say, when you want to build wealth, whether it's the real estate market, whether it's the stock market, and the various ways that you can do that, speak to a real estate consultant and expert who can help you as far as the area, because the rules in real estate is location, location, location. So talk to a real estate agent. If it comes to investments that you're not necessarily able to maybe go to Charles Schwab, or you want to learn more about strategic dividend investments and things of that nature, and hedge funds and all those other alternatives that you can invest in, speak to an expert. I'm Stefan Ninsala, Certified Financial Planner. You can always reach out to me. I'll have that conversation with you and help you on the road to success, to helping you build wealth. Signing off.